Right, techies and scientists, welcome back to the channel. And I do apologize for delaying starting the live stream, and just life got in the way. I just had one about the time, maybe like 30 minutes before, and contractors come in. I had two contractors coming in, and they're trying to squeeze me in, and they were supposed to come at 11. They come in a little bit early, and they're knocking and banging at my door. Just life come in the middle. So if you think this channel is AI, so you have another thing coming. It is not AI. This is a real person running this. Alrighty. So there are no shortage of news going on around the world, and we know there's been a conflict going on across the world. It's been going on for over a week, right about now, and that is creating a lot of fear and anxiety in the market. Well, not necessarily in the market, but for people, because at the end of the day, this is a conflict against the masses, the people, and this is great benefits for the elite on either side of the conflict. Okay, so that's what we have going on there. So, but today's topic, we're going to talk about. I'll make sure I can hear. Make sure I can hear myself loud and clear. So today's topic, we're all going to talk about fundamentals. The age-old question is, which one is better? Is it fundamental or is it technical analysis? Now, to be honest and to be fair, both of them are important. Like, you need both. But it all depends on the style of trading that you're doing, obviously. So if you're investing long term, or if you're swing trading, especially if you're trading for multiple days, then fundamentals is absolutely necessary. Like if you're buying stocks, if you're doing options, mostly stocks, I would say. If you're buying stocks, then you definitely need fundamentals. You need to know um, what's likely to driving the price of stocks, what's going to impact it. And then other things when it comes to fundamentals is also um, conflicts going on, or geopolitical conflicts, and also how's the company doing, how many cash they have in reserve, how much money they are reinvesting into the market, how many how many of those people are doing a stock buyback. Is it stock buyback? Yeah, buyback. I think that's what it's called. And then you want to know the projection of how is the company doing in the future. So all these fundamentals are definitely necessary. Now when it comes to intraday trading, when it comes to scalping, like, fundamentals is pretty much bottom line useless. Fundamentals not gonna help you jack on what is going on with price and everything. Matter of fact, fundamentals, with the idea of fundamentals when you're intraday trading or scalping, it's probably going to hurt you more than it helps. And one of the reason for that is, so an example of how fundamentals may not work in your best interest long term is by looking at crude oil. So if we know what happened on Monday or Sunday night, um, we have this country on the other side of the planet. We wanted to block the Strait of Hormuz, preventing oil to free flowing through that narrow strait. So now, normally, as a normal human being, logically thinking, you think, oh, okay, well, if oil is not going to is not going to go across that path, then what would make sense is that the price of oil is going to spike up. I mean, make your number. It can go up to 150, 200 dollars per barrel. So that makes sense, right? That's what should happen. But and then you start seeing that a little bit, maybe on Sunday night, and then leading to Monday morning, it spike up, spike up, spike up, and then it quickly retraces lower. So this is the part where fundamentally it makes sense for price to go up, but the market is rigged. You know what I mean? So it's rigged. against you. It's rigged to manipulate your sentiment, and it quickly retraces. So I'm in the midst of talking about that. See, it'll spike up to 120. This is the biggest spike ever he has done in like forever, ever. This is unprecedented. So it went up all the way up to 119.48, and then now it's resting at 85, just chilling, relaxing. You know what I mean? So this is one of the things where fundamentally it makes sense that price should be spiking up, but it's not. And then there are reasons why it's not spiking up to the level that people on YouTube or in the mainstream media is telling you about. So people are using something that happened in the past, in the 1970s, where there were long lines waiting, people waiting to gas up, where the price of gas spiking up really high, and then things. It was pandemonium pretty much. But this is not 1970s. I mean, since then, people have made adjustment. There's a petroleum reserve, and then there are other ways we can get to oil. Now people are driving electric cars and everything. Now, any spike you see in price of oil is just manipulation, pretty much. It's because they want to take it up there. But 9 out of 10, um, that whatever's going on that side of the world should not affect the price of oil much short term. Now, in the long term, if this go on for like 3 months, 6 months, then we may have a real issue in your hand. But other than that, I'm not expecting price of oil to shoot up. So this is one of the things. Even though you will be investing long term to buy crude oil, even though you see spiking up at a certain level, but that doesn't translate into profitability. Profitability. Okay. So this is one. This is a clear, perfect example where fundamental is rigged. So it's rigged against your sentiment. So let's take a look at couple charts here, looking at the 1 minute. Now, if you are intraday trading, especially if you're trading futures, like fundamentals definitely do not help you at all. I mean, what fundamentals you're going to use to explain away this big spike over here? Now, that one I can explain that one. And at 8:31. So at 8:31 we had the CPI. I mean, not CPI, CPI. At 8:30. So to me, this is good fundamentals. Okay, so they're already telling you what's going on. You know what I mean? Which is why I always use this. I use the calendar, economic calendar as fundamental. I use what is this seasonal tendency as fundamentals. But the technical part of this is when you start getting into the chart, you start looking at SMT divergences, and then you start looking into, okay, where should you best enter when you start using your fib. Whether you're investing long term or if you're scalping, you want to make sure you find the best entry. So this is where technicals come in. So when you enter at a price level with minimal drawdown, so this is where technical helps a lot. And if you're very good with your technicals, with your technical analysis, then there's a higher probability that you'll win. That doesn't mean you will never lose, but there's a much higher probability. So, for example, we're looking at this one right here. So the technicals are: you draw a line at 8:30, you draw a line at midnight, okay, and then you're trying to see what is price doing around midnight. Let me see if I can find a better example here, because I don't want to go to that chart. I'm looking for it. So so I already have things kind of like set up in Thinkorswim. So I use Thinkorswim. I use Ninja Trader as a platform. You can use any one of those platforms that you want. Any They will give you exactly what you need and what you're looking for. Whether you're using what the other ones that they have out there. I think it's MT4 or I don't know. That to me, I use Ninja Trader and I use Thinkorswim. And Thinkorswim is great when you're doing options trading. So sipping with my cup of coffee here. So yeah, this is what I'm talking about. So technicals is when you get down to the 1 hour, the 15 minutes, you get down to 1 minute, and then you see an area of opportunity where you can enter and make a lot of money in a very short amount of time. And then the goal of technicals or technical analysis, especially as retail trader, is trying to find that opportunity consistently for a long period of time. Okay, so this is what I mean by fundamentals. So we have the midnight open here, which is at, oh, this is crude. Well, yeah, let's go with it. Crude, it doesn't matter. I mean, the technicals kind of like remain the same. So we got at 82, 82, 88. Okay, and we know when it comes to crude, it's bullish, or maybe it's trading sideways, but we'll just go with the assumptions that is bullish. And also, when you do technical analysis, there's a lot of assumptions. There's a lot of things you need to know, not just from a graph and chart perspective, but you need experience as well. You need good mentors, um, and you don't have to listen to all the mentors and everything that they do. You just need to listen to the good things that they're saying, things that resonate with you, things that you think make sense to you, things that make sense in the chart, and then you can use it. And sometimes, even within technical analysis, something that may work today may not work tomorrow. Okay, like your the EMEA, like this stuff, they may work at some point, and at some point they don't work anymore. Which is why you have over 1,000 indicators out there. It's because at some point it seems to work, and then after a while it doesn't. But you know what always works? You know what constantly works all the time? All lows, all highs, the middle of the range. Okay, those things will always work all the time. Like how price behave certain, or like a one on all low, this will never change. Going, so you have a range here, which is from this level, and we're using crude oil, and I don't trade like crude oil at all. I mean, I've never touched it, I've never looked at it, and I'm not interested in trading it. But at the end of the day, is to show you when you're using technical analysis, apply the same across the board. Yeah, there might be a little bit tweakings here and there, a couple things you need to change. There are some adjustments you may have to do. You may have to dig a little bit deeper into some of the fundamentals around that particular commodity. But the technicals almost always work the same. Okay, let me see if I can get in Fibonacci, and my Fibonacci is my favorite tools to use. There are other tools out there that I use, but Fibonacci is my go-to. So now you're looking at this on the 1 minute, and you kind of like the next step within your technical analysis is to break it into market structure. So you're looking at this old high here, and then you're looking at the old low, and you drag your fib all the way down here, and this is your range. Okay, all right, come on. All right, so that's your range, and let me make sure I get rid of that. So what's going to happen is price is gonna navigate around the 50% of it, and at some point it's gonna go outside of that range. Okay, and then once price go outside of that range, it may come back into the range, maybe within the 50%, or at the 38%, 38.2%, or 70.5%. It may go into that range, and then go again outside of that range, which is over time when you look at it, it's gonna look like it's going on a trend. But when you're looking at the trend, how do you enter a trend? Do you enter all the way at the top, or do you enter at the bottom, or do you enter in the middle? So using that Fibonacci and the market structure is gonna give you a better picture where to enter. It's not to lose, but to minimize your drawdown. Okay, And minimizing your drawdown is going to improve your psychology, is going to improve the way you feel about your trade, all of that. For example, now wherever crude is right now at 86.48, it's probably not a good idea for me to go long. Okay, and it's probably also not a good idea to go short because it may spike up and clear above these highs here. Remember what I said earlier? Things that never change is all lows and all highs. Okay, so there's a high possibility that price may try to clear out this all high here, which is at 88.5. Now, what will be the next question you need to ask yourself is what will be the catalyst that will make price to surge all the way to 88.5? Now, this is where you're gonna use something different, something that's different from fundamental, something that's different from technical analysis. This is where you download True Social. Yes, True Social is gonna be your edge, pretty much. So now this is we're talking about another territory here. This is beyond technical and fundamental. So we're talking about your edge, your moat, what's giving you your edge. So why would you download True Social? Well, we have a president here. Whenever he speaks, he either tank the market or rally the market. How about you use that as your advantage? Okay. Where does he run his mouth? He run his mouth. It used to be Twitter, but now it's True Social. What you need to do is download the app, follow him, or follow people like him around him, and then you make sure you set up your alert so you can be on the finger trigger to find out what's going on. Now, other things you need to know is, economic calendar, what's going to happen, and also the next best thing you need to know is time. When that usually happen? Usually he get finger happy after around 10:30 a.m. and between 10:30 a.m. and around 3 p.m. So this is the time window. I know it's a big time window. I know. But this is the big time window where you can see, okay, what is he going to say? Is he going to say something that's going to trigger the market? That is your moat, your edge that you need to know and download. So me at this point, if I were to trade like crude oil, I would just stand still. And this is probably the next best thing you need to do. If you don't know, if you don't understand something, the best thing you need to do is stay on the sideline and then just watch and observe and try to see what the market is doing next. Because in this game, capital preservation is key. Okay? Okay, so man, I almost forget about that. So with that being said, if we know price is bullish, okay, if let's assume that price is bullish, like crude is bullish, okay, one of the key things you need to look for is the midnight open. And I'm going to zoom in here if it allows me to zoom. And where's the midnight candle? I'm looking for the midnight candle, 12 a.m. And this is the open right here. The open is at 82.88. Okay, for every single instrument, for every single commodity, you always want to make sure you highlight the midnight open and the 8:30 a.m. open. Like these two, if you don't do anything else, you need to do these two. You need to know where's that at to see if you need to go short or if you need to go long. So if price has been trading higher than the midnight open, and then like right around 8:30, right after 7, and then you start seeing or like a little bit of reversal. Probably a little bit before that. Let me see. See, now the reversal started before 7 a.m. Okay, so we got around 5:54. It started to reverse. It started to go lower, and went back up again. And right around 8:30, 8:59, 9, went up and it reversed again. So what you need to look for is evidence for price to go higher from below the midnight open. So midnight. So you have the 8:30, and then you have the midnight open. Between these two, you need to figure out where you need to enter and go long. Okay, so you combine that with the range. Okay, so you have the entire range, and then you have the midnight open, which is below the 50%, which is at a discount. If you want to buy a house, you want to buy a house at the top of the market at the most expensive price, or you want to buy it at a lower price so you can get a deal. So in the future, so the price of the house can appreciate, so you can have equity. You want to wait until you buy it at a discount, right? So it's the same concept here. So below 50%, you buy at a discount. There's a midnight open, and then you have this old lows here. This is a loaded deal for you to go long. Now there will be opportunities probably 30% of the time where this will be wrong, but 70% of the time, I'll probably say 80% of the time, when you have these tweak convergences, meaning you have this old lows here, and then you have the midnight open, which is at a discount, then you have the market being bullish because of the conflict going on the world, and then you have this market structure here. When you set up your fib like this, and then you see prices kind of like moving in that range around that 50%, and then you wait for it to drop below that 50%, optimally at the 38.2. Or if you were to flip that, if you were to flip that Fibonacci, where the 70, that 75% will be down below, then you can wait until you get to the 70.5% or the 61.8%. You know what? Let me just flip it. Just might as well just do it. We got nowhere to go. So this live stream will be a little bit different. I probably will not be doing much if any execution. This one will be more like a lecture style kind of thing. And there's a lot of stuff I need to cover, and I don't even know if I'm gonna have time to cover all of that. I want to cover, like, if you investing long term, how would you approach? I mean, this is not financial advice, but the thing is, this is what I've done in the past, and it seems to be working pretty well for me. Doesn't mean that it will work well for you, but this is something you can contemplate. This is something you can look into. And my computer is not very cooperative, so bear with me here. So it's not perfect, but okay. So we got the structure correctly. So I know, people may go back and forth. You use the Fibonacci correctly. At the end of the day, what matters is you got a 0, you got 100, and then you got a 50%. That's key. That's the only thing. If you can't remember anything, that's the only thing you need to remember. There's the 50%, and then you're trying to figure out, okay, how far below that 50% you need to get in order to minimize your drawdown. I mean, this is what I'm saying. Like, if you see price going up like this, like right around 830, would you try to go long at 87.2? No, because at 87.2, you're still in the premium. You see all this drawdown that you have to go through. I mean, how would that make you feel? Not good, right? So it's probably best for you to wait. It gets to below 50%, and then you say, okay, all right, now it's below 50%. I'm assuming that price is bullish. What are the other technical analysis or technical levels that are here where I can enter to minimize my drawdown and maximize my profitability in a shorter amount of time? Because I'm not trying to babysit this trade and watch it. Okay, so that's that. All right. So, yeah, I remember what I was saying, that before I flip this Fibonacci, I said you either can get at 38.2%, which we saw that candle drop here, like I don't want on 10 a.m. It dropped into that 38.2% when you flip that fib, or you can get it at what I think that's 62 or 61.8. Obviously you missed it, so it will deny you your entry at this point. That's okay. That will happen. Okay, and at some point you probably have to figure out, okay, all right, I need to get in at some point there. Now, once you get below that midnight, how would you know, like how would you know to enter? How would you know to go long? Because it may go much lower and much lower. Listen, unless you have somebody on the inside telling you at the exact price to enter, you're gonna have to make a risk and enter below the 50%. Okay, the only thing you can do at this point is wait for a big displacement. You see all these drop down candles here, all these red candles. As long as it trades above these drop down candles, and then if there's a slight return into it, that's where you would enter. Okay, so let me see if I can use that box here. And again, I don't trade crude oil. I don't trade it at all. But I'm just showing you with the technical analysis, you can apply it across the board. Hmm. And I wish this thing was. So this whole candle here started all this price action to go lower and lower below that 50%. Once it reached that level here, it bounced back up. I'm sure there's a level here on a higher time frame, maybe like on the daily, maybe on the hourly chart. On the hourly price level, that's why it quickly will trace back up. But we're not gonna get into all that because with this thing, the way it's moving is too slow. So we'll write it the way it is. So once it trade above it and close above it, the best thing you need to do is wait and get in like I don't want 50% of that entire box, or you're getting in at one of this level here, which is on this side right there at 84.87. This is where I would place an entry to go long, or I'll place an entry to go long from here. Which more than likely I wouldn't, knowing myself, trying to get in at the best price, I will put it right here. Okay, 84.87. As you can see, I would have missed it. So there's a little bit of personality as well that gets into trading. Just like I mentioned, if it was me, I would have missed this entry right here because I'm not that aggressive to get in at what level is that? 85.4. 85.4. I wouldn't be that aggressive to get in there because I would wait for extra confirmation. I will wait for it to drop at the very minimum. I'll wait for it to drop to this lone candle here. So to me, this is why I always identify these lone candles. This is what I mean by lone candles. You have a lot of white candles or green, but I'll just say white because it's white. You got up candle, and then you have a down candle, and then it went up again. Like, what are you doing here, dude? Why are you here? Like, why are you here? That 10:05 candle to me is a suspect. You do not belong here, sir. So what I'm going to do is highlight that candle and then to see if we were able to get in. And yeah, it looks like you'll give me the entry. But again, even though I noticed, I probably wouldn't get there because to me that would be a little bit too aggressive. And then this is where your personality comes in. If you're very aggressive and then you don't mind going to a drawdown, and then you say, hey, I'm just gonna enter and close the chart and go home, or go to the grass and touch grass outside, hey, that's you. That works well. You know what I mean? But I know for me it wouldn't. So I don't have much patience when it comes, especially when it comes to intraday trading. So this is a flaw in personality, which is why I said personality shines in as well when it comes to intraday trading. Like, but long term, I don't care. Long term, I will enter and then I will close the chart because the stocks is whatever you put in, whatever you put out. But when it comes to options and futures, it's a little bit tricky. It can plunge a lot lower than you can taste for, and you may end up, owing the broker, or they may do a margin call on you. So it's a different beast. So which is why my patience is very short when it comes to intraday trading with futures and options. So yeah, so I would definitely, this is another potential area I would target to get in. Okay, and let's see here. Yeah, so that would be a good entry right there. If I were to miss that midnight candle down below, or if I needed that extra confirmation. So all this thing I've been explaining over the past, I would say 10, 15 minutes is all technical analysis. And you can take this and take it in anywhere and everywhere, and it will work the same. All high, all lows, the 50% of a range, market structure, internal range liquidity, external range liquidity, okay, and price level and time level, midnight open, 8:30 open, top of the hour, bottom of the hour, and then 10 minutes before the top of the hour, 10 minutes after the top of the hour. I mean, all this is technical analysis intraday to kind of like give you those extra edge to get into the market. And then there are things, there are additional things you can use as an edge to the market. I know I'm going on the technical analysis tangent, but I want to make sure I drive it home. Okay. So there are also staging, different stages of price when they go to a different level of a price. So you have price, it will go up into, it'll start going up and then consolidate and then go a little bit higher and then it consolidate and then go higher. To me, this is what I call staging. Okay. So let's take a look at NASDAQ, and let's take a look at what we're talking about staging here. So you have a low, a lower low, and then you have that one. So, and then you have stage one, stage two, stage three, and then boom, reversal. Okay? And then start going lower. So you have stage one, stage two, and stage three. So when it comes to this, especially when it gets closer to stage two, you wanna watch it. So what do I mean by stage two? So you have the reversal here, and more than likely, if you don't have experience, you won't see this coming, and it's hard for you to see it coming unless you're looking way on the left side. Okay, so usually what I do, I identify the second stage, because to me the second stage is very important. This is just like your car, and then you have gear two. Okay, so that second gear is very important. This is where the car start picking up. You know what I mean? So there's that, and then so that's stage two going up, and then there's a stage two right here also going down. Okay, let's. So you may say like, okay, that stage two you're talking about, I don't get it. So yeah, this long here, and there's a gap. You need to identify that gap down below here, and as you can see, it traded into that gap. Right, oh, come on, right here, or very close to it. Okay, it traded into that gap. This is like a consolidation of gap. This is the multiple gaps right here. It traded into it and then start going up. Within the stages, you want to make sure that price doesn't trade and close below the second stage, whether it's the stage going up or stage going down. If it closes above or below it, more than likely it's gonna keep going toward that direction. So for example, if price were to keep going and close lower than, let's just say lower than 24,929, and then start going back up, I know this particular level of area right here will be a rejection block, and then it will just keep going lower and lower. But again, we're not in a bearish, well, temporarily it is not a bearish market. It's bullish. Now, how do I know it's bullish? Let's zoom out. Let's put it on a higher time frame. I mean, I bet at best it's been consolidating. Man, I don't want to take it higher level because it's gonna take a while. But let's do it. So it's definitely going in a consolidation here at best. So this is what I mean by it's temporarily bullish. Okay. So man, can you stop rendering? So price dig lower than all these lows here, and it's been rallying up in the stage. Okay. And you had created multiple stages here. So we have price going up. You got stage one, a little bit of consolidation here, stage two, and then you have stage three. Let me zoom in a little bit closer. Yeah, so you got, what did I say here? Stage one, stage two, stage three, and you got stage four, and it's been consolidating for the past few days. To me, this is trouble. So this is trouble. It's taking too long to consolidate here. I wouldn't trust it to go higher. So to me, this is where again you just sit on your hands. So if this needs to go up, if it's bullish and it needs to continue to go up, what I expect to see is a big spike up. Like I expect price to go high, it'll go higher, cover these relative equal highs over here at 25,244. Okay. Then once it go higher than that, then there will be like a short retracement, probably to the middle of this consolidation here, around 25,025, maybe slightly lower. Okay. And after it goes lower than that, and then it will start going higher and higher again. To me, that will be the only way I will start engaging the market to go long. But at this point, at this stage right here, I will just sit on the sideline and not do much because it can go either way. And again, download your True Social. It will give you an indication of what's going to happen. If they say, "Hey, we're going to do a ground invasion, and we're gonna put X amount of, you know, soldiers there, and we're gonna do this and that and the third," and then if they're not very decisive about like a clear plan for victory, then you can start seeing that thing start going lower and lower. And the reason why this will go lower and lower is because everybody is gonna start fleeing to the dollar, and the dollar will strengthen, and then all this asset here for the Nasdaq will start going lower. That's the fundamental explanation. If you want to talk about fundamentals, but if there's a clear victory, and then we see that things are moving to the Strait of Hormuz, and then the propaganda is working really well, then what you'll see nice pop up, and then it'll just keep going higher and higher to reach to that level, which is 25,504. Okay, but that particular area right here is highly problematic. And it's around 1056. There's the midnight open here, and you have the 830 down below, I mean, it makes sense. It seems like okay, it dig into a bit into the 830 and then start going up, but it's not sustained. It's not going higher and higher than the midnight. So with that being said, maybe that midnight level is a rejection block, and it's gonna start digging deeper and lower. But you don't know. You don't know for certain. The only way you will know for absolutely 100% certainty if somebody on this side tell you, "Hey, go short." Then I'll say, okay, if somebody close to Nancy Pelosi, yeah, Nancy Pelosi, and maybe to the Trump circle, Barron, and they'll then if they tell you, yeah, go short, then yeah, I will go short right now. Like I wouldn't put all my eggs in basket in there, but I would definitely put a couple of coins in and then go short. I mean, it's being staged to go short. I can tell you that right now. It's looking staged to go lower than to go higher. But let's take a look at the lower time frame. Let's see what we have here. Now, you wanna know how I'm going to know whether it's gonna go lower? Come on, this is not what I wanted to see. So we have a second stage distribution, right? Let's wait for this thing to render. Okay. So it went slightly below the second stage. Okay, that's that right there, which is which is not a bad thing. This is just a wick, and if price failed to get higher than 25,114, if it gets just to the middle of this box here and then start going lower, then it's just gonna go short. Okay. I mean, that would be if you give me an absolute ultimatum of okay, well, what do you think is gonna go? Give me your best scenario. That would be my best case scenario right there. And then I would use this relative equal highs over here, the bodies, 25,102, and I'll just go short from there. That is if it doesn't go above that midnight open. But if a body close above that midnight open and it close is green and then it start going higher and higher, then more than likely it's gonna keep going higher from there. But at this point, I mean, yeah, it's this is a high resistance liquidity condition. Like it's not very favorable. I mean, you have a couple spots here where it quickly went lower here, but I mean, for most of the time, it's just garbage. It's just trash. See, like if you're inside of that trade right here, you're not gonna feel comfortable. I mean, you're not gonna know what's going on here. I mean, it looks like it could be trendy. It looks like, oh, okay, it returns here, then it goes higher. So this one definitely seems like, okay, I'm gonna wait for it to return to this particular level here and go long. And it gives all the signatures that it's going long. That's the sad part about it. uh, but it didn't, and it plunged lower. It gives you the false sense that it is trendy, it is retracing lower to go higher, but it retraces too low. To me, this is the part where I will suffer a loss. If I have my assumptions to go long and I see all this wick here, to me this is a key signature that it's primed to go higher. And then it does this, and then it yank me down. So to me, the moment it would fail to get higher here, I probably will move, throw my stop loss a little bit higher to reduce the loss. But well, I mean, what is the point of that? You know what I mean? It's not fun. It's not fun. It's my homie can get on. So from technical analytically wise, you have to do a lot of waiting. And unfortunately, when you're doing technical analysis, especially on the lower time frame, and then when as a futures, when you have contract, whether it's 2 contracts or 20 contracts, when you have a lot of contracts on the line, you got to be very careful how you enter because you can make a lot of money, but you can lose a lot too. Okay, so this is looking promising that is going lower. Okay, let's see here. But is it going lower though? So this greens here, this is I think this is the first gap that was created yesterday after 9:30. This was the first one, and then this is the second gap that was created yesterday. So I highlight those to see how price is moving around it because that first gap after New York Open is highly influential. Could be highly important, but it's definitely highly influential. Especially at the beginning of the week, you want to make sure that Monday at 9:30 on Monday, you want to make sure you take that first gap, and then you just highlight it across the whole week, and then you're gonna start seeing, especially if price is going sideways like this, you're gonna see that price dance around it a whole lot. Okay, so let's see how sustainable price will go lower. And I mean, this is Ninja Trader right here. And this is what I was mentioning earlier in Thinkorswim. You have stage two. It got maybe right to the middle of it, and then it start going lower from there. So which is why I enter short. That doesn't mean it cannot reverse because I mean the market is real tricky right now. I mean it is beyond the trick bag is out for real. Like the stuff you think work is just not going to work the way you think it's going to work. And then look at it. It started to go lower. It gives me the signatures that I want and need. And then it yank you out. ah, yeah, yeah. So I'm gonna remove those extra stuff here. See that? Very tricky. It's a lot of tricks. It tricks you on the way. It tricks you on the way up. It tricks you on the way down. I want to make sure that I remove all these extra levels here, so I can keep it clean. So what I've done here is identify that range, that second stage range. You got to the middle of it, and then you return lower. So I'm trying to see what is gonna try to remain lower than this level here. See, in a very good low resistance liquidity conditions, what it would do is just get to the half of it and then just keep trading lower and lower. Like all that spike up is unnecessary. Like why? So, and you can see that, oh okay, maybe it's staging to go higher. Anybody's guess at this point. See all these little things here, it's make it very difficult. It doesn't give you that easy feeling that it wants to go one way or the other. Yeah, the moment you open your chart, once you start seeing all these spikes, all these wicks, yeah, you know your option is great. And then what you need to do when you enter a trade, do not overstay your welcome. For real. It's just whatever partial you can get, just grab it, throw your stop loss, and get out of dodge. Yeah, if it goes higher than this level here, 25.76, I'm in trouble. So that create a swing high here, right there. So you have a low here, a low on the right, and a low on the left. This is another key signature of bearishness. But again, when you are in a high resistance liquidity conditions, when things are very difficult, all your ideas of bearish, bullish, and candles and this and emoji, blah blah blah, none of this shit work. Like none of them work. Absolutely none of them work. I mean, I have seen people who trade way better than I do, and then they'll put a trade in, and then they'll have everything, all the quasars and the stars and the moon align, and then price just go whoop in the other direction, and I'm like, ah, damn. Yeah, and then there's nothing you can do. The best thing you can do is control your emotion, and then accept your defeat, and then live to fight another day. That's it. That's all you can do. I'm expecting price to go lower than this level here, 25, 28. I mean, if it doesn't do it very quickly here, within the next minute or two, I'm going to collapse my trade. And then this is where the part my personality or personality flaw comes out. It's just that I've experienced this enough to know when it's unlikely, unfavorable conditions for me to say, you know what, let me bail. Like this wire, yeah, I don't like this one bit. Like it's spent too much time inside that gap, way too much time. Like it spent too much time here. It's spending too much time over here. When it's easy, it just pop in, go in there, just like right here. It just come in and then just drop, go up, and then just whoop, drop, easy. And then your goal as a scalper, as an intraday trader, is to be able to identify those quick, easy runs, so you can remove yourself from these frustrations right here. I mean, if you can spot them coming in from a mile away, and then you position yourself to just a quick in, quick get out, man, you will find trading very enjoyable. Like that particular position right now, it's not enjoyable at all. I've been in this trade for how long now? Oh, three. I've been in it for 7 minutes. I want you to think about it. So been here for 7 minutes. For this one, 20, 27 to 28. Okay. So compare this section here. In 7 minutes, it traveled from 25,102. What level is that? Let's just say to 24,985 in 7 minutes, really quickly. Very nice. And then you look at the same time frame for my conditions, not good at all. Very unfavorable. Okay, this is what I expected to see. That's good. But it's not the same. Okay. I'm probably gonna take a partial right up here. I mean, even though it moved rather quickly past this low here, but it didn't move fast enough for me to get right here. So I'm thinking it's just gonna keep pulling my strings here. See, it didn't even get to this level right there, which is crazy. Now this is the part where the stop loss management or the lack of the stop loss management kind of shine and it shows your weakness. If you move it all the way down here, there's a high probability it's gonna stop you out and it's gonna go in the direction that you want. Okay, but if you keep it over there, there's a very low probability it's gonna get there. So to me, what I'm going to do is probably just push it down right here. Okay, and I am going to get my partial down here. I don't know what this guy is doing, but I am going to take it one tick above because it's gonna get close enough to it. Thank you, and not get there. You see? Why didn't this guy come sooner? Where was he? Why didn't he come sooner? So being impatient doesn't help. So I mean, even though there was a little bit of a delay here, um, there was a little bit of a delay for it to go up, but I think that nice price drop definitely paid off. Now, don't be surprised if it goes all the way back up here. I mean, I think it clear out this lows right here, and maybe I should just grab it and be done with it. Remember, and below all lows, it always going to go up. Yes, all these relative equal lows here, very high probability is gonna go much higher. And I'm gonna see if I can keep my partial right here because I don't want to lose all that gain. So remember when we were going up, we said there was a second stage. Where was that second stage? See, it's gonna come and knock it out. It shouldn't. So if it's still bearish, it should not come in the middle of this big red candle right here. It should not. But worst thing have happened. uh, and I think it's gonna go. Yeah, see that right here. That's too much. Too much, bro. It went up way too much. Let me see right here. So this is what I'm talking about. I'm talking about this big red candle. If it drop, it should not go higher than the 50%. But it looks like it's aiming for it. Alright. See, right at that 50%, the bodies, which is why I put my stop loss over there. I said, hey, if it's gonna go higher than the 50%, you might as well just stop me. I'll be done with it. Yeah, most of the time, if price is really bearish, if it's really bearish and not just a retracement, it's just gonna come up all the way to the 50%. It should not go above the high of this big red candle. If it does, then it was just a retracement to go lower. Um, it's at best case scenario, what's going to happen next is going to go sideways. All right, we're coming up to that 1 hour here. I wanna be able to see if we can close that trade. Um, so what I'm going to do before I navigate to another screen is to make sure I trail my stop loss a little bit lower. Now if it fails to go lower here, then this is just like a retracement to go higher. It's like a computer game. If then, if this, if that, then this, if this, then that, if this, then that, if this, then that. And then over time, when you spot this, and then you'll be able to tweak it, make and then change it. Okay, over time, it takes a while. It takes a while. It's the same thing that get repeated over and over again. All right, let's yeah. So this is what I wanted to talk about. So I remember I said right now because price is going sideways, it's kind of like on a stage. So it's staging to go higher, but it's staging also to go lower. So we're tracing low to go higher. So there's multiple stages. So I said there's stage one and then stage two. I like the stage two. Then I said the week below, and then reverse over here at around 10 a.m., which is man, this is early reversal. Usually reversal come out around 10:30, but this one came in early. Yikes! Anyway, wow. And I said this is so once you reverse like this, you create a bearish breaker, which is high, low, high, high. But you also have this second stage. So you have it came down, went back up. It's a small consolidation, nonetheless. Consolidation it is, and then go lower. Then this wick here at 10:03, and then it consolidate again, and then boop go lower. And then after I identified that second stage, I said, hey, if if it goes higher than this, then it's bullish. Then if it doesn't go higher than this, then it's bearish. Okay. And then I enter short right here. I think I enter short right around this level. I don't remember. And then went up against me again, and then start going lower. Okay. Am I still here? I think I want to make sure I'm still here. So to me, that second stage is what determine if it needs to go short or not. So right now it's stalling. It's trying to see if it can pick up steam to go higher. And I think what I'm going to do here is just claim my trade and get out. Yeah, it looks like it's staging to go higher. So I'm gonna trail my stop loss lower here. Come on, let me get it. Come on, man. Yeah, I don't like what it's doing. And that purple area is an hourly inverted gap. I believe. Let me see. I don't want to go all the way back, but let's see. What did I put for annotation? And you're gonna see the reason why I have notes there. So it was 3 4 11 a.m. hourly inverted gap. Ooh, that's very precise. Let's see. 3 4. What day was that? Yeah, 3 4 was last week Wednesday. Man, we got an hourly gap that is still affecting the trade today. A week later, they don't go away, man. They don't go away. All right, so it's stalling. There's a high possibility that yeah, it's gonna hit my stop loss. Thank you. Yeah, I think at some point it was like 200 something, but it's fine. Yeah, to me, this is all signaling to me that yeah, I'm ready to go back up again. Maybe it's a retracement much higher to go lower, and again, maybe I could have just keep my stop loss right here. But hey, it all depends on your pain and tolerance. I have very low tolerance for pain. Like when I see things keep dangling like this, um, I already know what's up. I mean, if you wanted to go lower, let's see here. Yeah, if you wanted to go lower, why didn't you just go straight for these down below here? Okay, so you wanted to stop at this particular gap right here, and that's the stop you wanted to make. Now, if price is on the trend to go lower, so you have first stage, second stage, you have a third stage here, and you can argue that's a fourth stage, and then it may be creating a fifth stage here. But I think before it does that, he may go inside of that particular third stage gap here, right in the middle, and try to see if it can go much lower, which kind of like this gap also highlighted. Okay, funny how that works. But yeah, I wouldn't go short from here. I wouldn't go long from here. I mean, even if it start plunging lower down there, don't feel like it was a mistake for you not to enter. Okay. I think that's kind of like what I wanted to talk about today. Let's check out a few other things here. Let's see. So fear and greed index, yeah, out of fear, and rightfully so. Let's take a look at gold price. See how we're doing. How we doing? Uh, let's see, 54.14. I feel like it should have been higher than that, but hey, why do I know? I don't control these things. Silver at 85. Seriously? It's all manipulation. 116, and now it's at the half. Fucking hey. uh, Last thing I want to briefly cover here, and I'll probably cover this in the next live stream. If this is the part after you get all your fundamentals, let's say you want to invest in Apple long term, after you buy Apple, and you have your Fibonacci all set up, okay, and this is Nasdaq down below, and then this is Apple superimposed on top of it, okay. Apple at some point was, why was that high on this one? So it doesn't give me the number, just give me a percentage. Oh well, we'll roll with it. So from this high here to this bottom, Apple is at a discount, if you ask me. Will they allow me to get there quickly? Let me take a look at Apple on a daily. Is it APPL? See, price is going back up. 260. Yeah, I think Apple was higher than that at some point. Way higher. Alright, we'll check it. We'll check it. Yeah, I promise I'm going to get out in a few. So it was 288. Well, yeah, it's not at a discount. Not even close. So now there's this low and there's this high over here. So this was the lowest low before it started going higher. So you took your Fibonacci. Huh? Sorry. So there are many ways to skin this cat. But again, it all depends on your patience and your personality. I mean, when it comes to long-term investing, you definitely want to be patient. Okay, because this is where long-term um, long-term goals are. This is where you make your long-term strategy. This is, yeah. So this is where you create your generational wealth. So you definitely want to be patient on that one. Man, yeah, this system is not forgiving at all. There you go. I mean, the highest has been over the past few days. I mean, I said since 2022, to be honest. This high right here. 22, 32 point, no, 38.2. Right on top of it. 243. Okay. And I'm assuming 10 or 20% is somewhere down in here. I'm not gonna fix that fib. It will take me forever. Okay. So from this level here to 88 to this level here, to that short price range here, it's a relatively at a discount for this price structure. That doesn't mean it cannot keep going lower, but it can. So as a long-term investor, if you want to buy Apple, the best spot, I mean the absolute spot where you want to load the boat is when you drop below 229. If it drops below 229, to be honest with you, around 223, I mean, if you have $100, I would definitely put like $50 to buy. And it could be $100, 1,000, 10,000, 100,000. I'll just take that half and just dump it in there. Okay. I mean, Apple is a good stock, is a good company. Um, they will go down, but not soon. They got some time. And oh, so the reason why I bought up Butcher.com is because if you don't have Thinkorswim, you can use Butcher.com to see if there are any SMT divergences. Okay. So what I'm saying is, see, you see, like right around this level here. So this that is that the dollar or is that Nasdaq? Hold on. Oh, that's dollar. That's not a good example. SMT divergence. Yeah, let's go back to Butcher.com since most people have that. Let's see. So if you are trying to buy Apple, um, like there is a let's see, there's a low here, and then white one it failed to make a lower low. But if you look at the Nasdaq, there's a low here, and it made a lower low on 29. There's a divergence here. If you are willing to buy Apple, and if the market condition favors bullish long-term condition, if there are no geopolitical conflict, that particular area right there, right here, right now will be a good time to buy Apple. 260. Because as Nasdaq made a lower low, then let me see if I can change that. So you can see it here on the Thinkorswim, and I'm going to edit that, and I'm going, instead of the dollar, I'm going to add, so slow, I'm going to add the NQ. And why am I picking NQ? Why am I picking NQ versus Apple? Because Apple is a tech company and is part of the Nasdaq. So you wanna compare these two to make sure if there are any SMT divergences. And I'm not sure if this is going to be helpful or not. But hey, we're alright with it. So I have to zoom out. Ah, oh, that doesn't help. Shit. Anyway, it's not giving. It's not giving, man. It's not giving. Anyway, 29. So if you can see it in the background here, Nasdaq went lower, but Apple failed to go lower. So there's a buying opportunity here to buy Apple. So if you see the same thing on your ballchart.com, and it looks like this guy is diving lower, I should have thrown my stop loss higher and get that profit. Anyway, so same thing that happened. You buy Apple long, should be in good shape. But you know, with this geopolitical thing going on, it's uncertain at this point. Anyway, that's all I got for today. Thank you for watching this live stream, and stay tuned for a video that I will drop on Friday night, and then I'll see you next week.